Hey, quick, quick! The crew's coming into dock already. Wow, we will eat buffet lah, we will see the view lah, we will go shopping lah. Huh?
No ticket.
Wait, what? No ticket? I thought I was being sponsored for this video. Today we're talking about cruise stocks. Really no ticket? I would... But I brought my luggage and everything. Huh? Fine. I'm not going on the cruise. I don't have any ticket. Never mind. I will still be talking about the cruise ship industry, and in particular, Royal Caribbean Cruises and Carnival Corporation. Let's get started. Hi everybody, my name is Ali. I'm your humble graduate from VIA. I love investing. I love investing as much as my wife loves looking for the next holiday. And with our powers combined, today I'd like to discuss with you about the cruise stocks. We will be studying the industry trends and looking at a few contenders and determining what the future will be like for the cruise ship industry. Let's start off by looking at how the industry is doing. Since COVID-19 hit the shores, cruisers and the cruise industry have felt the pain since February of 2020. The news was especially bleak when over 200 people were infected in a cruise trip on board the Diamond Princess. That episode was even more painful when countries closed their ports, disallowing some of these cruisers to dock at their shores. So it must come as a relief to the industry that Singapore has allowed cruise to nowhere services to resume from December 2020. So far, in terms of cruises that call port in Singapore, we have seen 82,000 people go on a cruise to nowhere. All those hungry for holiday Singaporeans, 82,000 people have gone on a cruise since COVID-19. But this phenomenon is not local. Overseas, worldwide, analysts are predicting that a pent-up demand will see people flocking to the first chance of adventure they might get. I mean, come on, who wants to be stuck at home? So, how are these cruise ship stocks faring? If all of this demand is true, we should see a rise in the revenue and ultimately profit of at least the largest players in the market. So we turn now to study the impact on the stock prices and, more importantly, the fundamentals. Let's start with Royal Caribbean Cruise. We turn to Morningstar.com to help us see the performance of the fundamentals in a quick view. Looking at the revenue, gosh, the company has taken a pounding and the demand hasn't really helped. Over the past 3 quarters, the company has barely made a positive revenue and has seen net income consistently in the red. There is still one more quarter to go, but I wouldn't hold my breath. That one quarter will keep things swimmingly good, but it won't keep the whole company afloat. What is a little worrying to me is that the debt has ballooned a little bit. Only natural though, because the company would have to turn to debt if they don't have revenue. But with a debt to equity ratio of 2.28, I don't see this as a healthy sign. Next, let's talk about Carnival Corporation. The same story is to be found in this company too. The revenue has seen a drastic drop and the net incomes are in the red. The pickup in the industry for holidays at sea does not seem to have the effect on keeping the company afloat. So, the fundamentals have definitely taken a hit. And although traffic is picking up, we are seeing that it's not enough to bring the company back to where it was. Let's look at the stock prices of the companies now. So despite the lackluster revenue, there seems to be some magic in the waters which have allowed the stock prices to fly out of it. For Royal Caribbean Group, the stock price has climbed from a low of $19.25 in February 2020 to $90.22 in March of 2021. In 1 year, the stock price has quadrupled. The news seems to be the same over at the Carnival Corp ocean of stocks as well. At its low in February 2020, we saw a price of $7.80, and now it has reached $28.46. That is also a quadrupling of stock prices. Granted, Carnival Corporation, we are nowhere close to the highs of 2019. So, in conclusion, news about a company does not automatically mean it's going well. Always refer to the fundamentals. The fundamentals never lie. Although the news and ads and people are going on wild holidays and the cruises and all that, it has not yet turned into a high revenue generating environment for these cruise stocks. And talking about revenue, I should add that seeing a jump in revenue for a cruise company only means that they sold lots and lots of tickets, but it does not mean that the cash has actually come in. So be mindful of such peaks in revenue collection. Lastly, debt is a worry. Cruises are usually manpower intensive. Manpower means salary, and salary is a cost. In a low revenue time, you can always fire people. However, you cannot fire ships. You cannot sell them with the intention of buying them in the future. So as a cruise company, come what may, you need to maintain the ships, and maintenance is expensive. So naturally, these companies have turned to debt to help to lighten the load and keep them afloat. But we must be careful. We don't want the debt to sink them when interest rates start to rise or when the bank comes knocking. So I hope you really liked this video on our cruise ship stocks. If you have been on a cruise before, please do write down in the comments how it's like, and remember to like and subscribe to this channel. Really no ticket ah.